So very simple to make sure that we can follow along. So I do have a project that was running for 3 months, and it was running January through March this year. During, I have contracted $10,000 with my customer, and I invoiced these $10,000 in 2 invoices, which were the first invoice was on January 15, and it was 20% of the contract amount. And I invoiced remaining 80% of the contract amount on March 11th. And at the beginning of the project, I have estimated that my project labor cost will be 40 hours of $4,800, and that I had the split between the periods when which the more detailed estimate when all of those would be happening. And I also estimated some expense, and all of that expense I estimated to be in January, and it was $2,000. And I already pre-recorded as well actual labor and cost transactions. So what I actually ended up spending with this project, I spent less than I have estimated. I spent 30 hours instead of 40 hours. And actual expense was lower as well. I had spent only $1,000 instead of $2,000. So what we are going to do, we are going to first of all use percentage completed contract method, and we will run revenue estimations for that and do the elimination, and we'll observe financial impact, and afterwards we will repeat the same thing with completed percentage method. Okay, so with that, let's go on and let's switch to my environment and let's take a look. Okay, let me just make sure that I have the screen a little bit bigger so we can see and we can navigate through that. So the examples that we are going to start with, the first that we are going to start is fixed price completed contract. I have created a project contract for it. It's very, very simple. So we don't need to go and worry about it. So I have created project contract with a single contract line, which is fixed price, and any type of transaction I'm including into this fixed price contract line. And the total amount of this fixed price contract line is $10,000. If I will go into the details and look on the invoice schedule, I have invoice schedule that 20% of that amount was at the beginning and 80% was later. And I actually already went ahead, generated the invoice, and posted the invoice for both of those milestones, the appropriate dates. So this portion is already done, so we don't need to spend time on that during the demo. So that is already completed. And also from the actual transactions perspective, let me just open the associated project to it. Let me make this a little bit bigger. So if I will look into my completed contract method, and if I will look into the related actuals. So I have already, I already have all the related actuals associated with that project as well. So I have expense transactions, trying to see how I can make it a little bit bigger. So I have expense transaction that I have recorded for $10,000 and sorry, for $1,000 in January. I have 3 time transactions that I have recorded, and those are January, February, and March. And I have that invoicing that I mentioned about $2,000 were invoiced in January, and $8,000 were invoiced in March as well. Okay, so with that, all of that I've done as project manager, and obviously time was recorded by project resources. And now as an accountant, what I done on the finance and operations side. As an accountant, I can review both my project contract and project in my projects list. So let's start from there. And if I will look into demo fixed price completed contract project, you can see that both cost hours and expense hours has been posted through Integration Journal as well and are available as project transactions, and total cost for my project is $4,600. So I'm able to see that, and as I posted Integration Journal, I have posted transactions obviously here as well. I just need to clean the date because those were early in the time. So I can see that I do have a project transaction already, which is for expense, I have $1,000, and I have hours transactions for 1,200, 1,200, and 1,200, and I have invoice that was posted of 2,000 and 8,000. And this one we can ignore for now because that was something that was corrected afterwards. Okay, so we do have these transactions in the list. Right now, how do we determine what revenue recognition method is going to be used for this specific project? So we do determine that, as I mentioned, through project cost and revenue profiles. So project cost and revenue profiles that I have, and if you remember the table that I have showed in the beginning of the presentation, there's those sample project cost and revenue profiles and all the accounting events that are happening. Let's just spend a couple of minutes going through that sample setup and what that would mean. So when I'm creating a new project cost and revenue profile, first thing that I'm picking is billing method. Either it's going to be a fixed price or time and material. So starting with time and material, the examples that I have, the first column was time and material no WIP, where what I'm setting up here, so if that's time and material, really estimates tab is something that I can collapse and I don't need to look at. Very simple setup that is saying for transaction type, either my costs are coming as hour costs or expense costs. I'm going to post this cost to profit and loss. And if I would be doing any on-account invoicing, that would go to balance, but that's not that much applicable for us because actually we are doing not on-account invoicing here, but we are doing transaction-based invoicing. And I'm not accruing any revenue for these hour or expense transactions, so I'm posting just the cost in this example. Right now, if I'm moving to time and material WIP, very similar setup where I have everything going to profit and loss from the cost perspective, but difference is that I'm accruing revenues and I'm tracking my revenue WIP, which would be for every single transaction type that I'm recording. When I'm, let's say, posting my project integration journal and posting my unbilled sales, these will go to the ledger as well. And those toggles here are marking that these will go to the general ledger. Right now, for fixed price, 3 examples that I had configured. The first one is that simple no WIP, fixed price revenue recognition method. So for this one, I'm just doing principal used for project completion is no WIP. And if then I'm selecting that, there is really no other components that would be really applicable much. My project cost is going to profit or loss at the time when I'm posting. And when I'm posting my on-account transactions, meaning I'm posting my milestone-based invoices, the milestone-based invoice amounts are going directly to profit and loss and are recorded in my P&L as my revenue. So that would be very simple, fixed price posting. And if I'm using this posting, then I wouldn't be using for what I'm going to show further down the road, the creating those revenue estimates and posting them or doing eliminations. My revenue recognition ends with on-account invoice posting. Okay, and moving on to those 2 methods that we talked about. So I will just talk right now about the completed contract here. So for completed contract, very straightforward again, then estimate tab is very much applicable. And I'm saying, how do I want to record, to calculate that project completion percentage? I'm saying that I'm using completed contract method, and that completed contract method means that I'm not going to recognize revenue in the middle. When I'm posting my cost transactions over the course of the period, so let's say January, February, March, in the beginning through project operations integration journal, they are going to profit and loss. And this periodic process, I'm taking these transactions at the end of the period from my profit and loss account and put this to VIP account to make sure that I account my costs as VIP up until I completed my project. And when my project gets completed and eliminated in the end, then I'm posting full revenue amount to my profit and loss and recognize the revenue, and also take my VIP cost that I have accumulated from VIP account to actual cost account. So this way I getting full P&L for my project at that point of time. So one another notable here is there is a matching principle which I can select either it to be sales value or production plus profit. And this matching principle applies to both completed contract and percentage completed method. So you can choose either of those. And the only difference between the two is how that elimination is being posted at the end of the when I eliminate my revenue when my project is completed. And if I say sales value, my full revenue account gets into a single sales value amount using the fee estimate fees that I have configured sales category, and that gets posted to my project ledger. If I'm using production and profit, then that total revenue amount is split into two. The equivalent to my cost of the project is posted using the production category, and my profit amount is using that, which is on top of my cost, is posted using a different category here. So it is just a little bit differently split posting on elimination time. So that would be it probably from the basic configuration perspective. A couple of other important things to note here. So there is a period codes that you need to configure to run revenue recognition. That's applicable both for completed contract and percentage completed methods. So and anywhere where you want to run that revenue estimation process that we are going to look at. So I need to configure how often I'm going to run and what's the period times that I'm going to run this in. We do have a menu item in project management and accounting in the setup that allows me to configure those. It's called period types. And this is just, quickly saying I'm, calculating it either on the weekly, monthly, and, what are those specific periods when I'm going to calculate my revenue, and, all the related cost and cost transactions will be and estimates will be accounted there. And the other important item is my cost templates. So the cost templates allows you to do a little bit more robust configuration in terms of on how I'm calculating that revenue recognition and how I'm grouping the transactions that I'm using for revenue recognition. So it allows me to control if I'm going to calculate completion method. Let me look at the lines here. Based on each of the transaction types, either expense hours, item is really not applicable in integrated scenario yet, so we can ignore that, but expense and hours are definitely applicable. So I can either use just a standard set of grouping of transactions that would be per transaction type, or I can make it more granular, where I can say expense, instead of having a single line for expense, I can have multiple lines, and I can choose specific categories within each line and say which categories are going to be included into the line. So let's say I want to use one rule for any expense that is related with my travel, and another expense that is related with my, let's say, miscellaneous expense. So I can definitely group those together as I like. And I'm able for each of those groups to say if this type of expense is included into percentage at completion calculation, and what would be the cost to complete method that I'm going to use for that specific line. And those methods are, we will go in a little bit more details in a bit, but I think the main methods for you to note is total cost actual, that would be using this cost template. There is also another method that is called total forecast actual, that is going to be using your operational forecasts, respectively, if that's expense, your expense forecast that project manager is managing on customer engagement side. If that's our forecast, that would be resource, that would be our your tasks durations that have been assigned to your resources in your WBS. And those resource assignments would flow in here as our forecasts as well. And there are a couple of other methods that I'm going to show in a little bit. But that template, cost template, allows you to conveniently group those transactions if you like, if you want to be a little bit more detailed than just saying for the whole project, estimate project, that I'm calculating my revenue estimate. You know, this is the rule what I'm using. I can be more granular and use different techniques for different type of transactions under the same estimate project umbrella. So that's definitely something that you probably will want to look at. And oh, and by the way, I can decide if my estimation is going to happen based on amounts or it's going to happen based on quantities, depending on what it is. So if I will look into the quantity-based template, you can see that my hours are included into my calculation. And I can see that it is something that I'm going to use within my calculation of the of this specific line. Okay, so I'm going to go right now and we will go and look into fixed price revenue estimates projects. So projects, and we call all of them projects. What does it mean and how do I think about those? So when I'm creating a new project as a project manager on customer engagement side, we already talked that all of those projects are flowing into the projects on the finance for accountant to review and add financial dimensions to it. Right now, if that project is associated with a project contract that has fixed price based contract line, we understand that we will be potentially using fixed price revenue recognition technique to recognize revenue for that project that is associated with such line. So for these projects, we automatically create something that we call fixed price revenue estimate projects. You know, you probably are very familiar with that if you're using classic project management and accounting in finance and operations. So those are the same estimate projects that get created in the back end when I'm creating the project on Dynamics 365 Finance, how it works historically. So we create those in the integrated scenario as well. Right now, the specific point of time when we create those is not at the time when you associate the project with the project with the contract line, but at the time when that project contract line on customer engagement side gets first milestone record in the invoice schedule. So if I will quickly go back and just show it to you again. And let me quickly go project contracts. And if I will look into the contract lines, so as soon as I create the contract line associated with the project, and in the invoice schedule, if I don't have any single milestone, my fixed price estimate project is not going to be created yet. But as soon as I create the first line in this milestone in this table, either through generate periodic milestones or manually, we will know that we need also to get ready for fixed price revenue recognition, and we will create that what we call fixed price revenue estimate project. Right now, let's look at the list of those projects and how this looks like. So fixed price revenue estimate project, you can think about it either if you want it to be one-to-one relationship to every single project that has fixed price transactions, you can absolutely, leave it as it is here. Or we have a lot of customers who say, yeah, I have separate projects to track different, activities that are going on, and they might be associated to the same contract or even to multiple contracts at the same time. But I can have but I can also have grouped them into the same fixed price revenue estimate project. So I can run my estimations for all the projects within the same group together. So think about it as a container that carries the same configuration on cost templates that we talked about, period codes. It means that how often we are creating those estimates, and my project cost and revenue profiles, which define the rules how those estimates are being calculated and what postings happens with these. So I can definitely group them together, and to group them, if I will look into the details of this estimate, it automatically just takes that project that it created it for when I just added this milestone out of the box into this estimate. But I can, if I would want to select additional ones that are available, I could select these and I can move those under the same umbrella, and I could edit the description and name it, something that I want together to understand that these are the projects that are grouped together. And I could calculate all the estimates for those projects together. So I can definitely do that. And then the estimation would run the same rules and use a single posting for revenue recognition for all of these projects that would be related. Right now, that would be for the grouping. And let's go and see how actually that revenue estimate is getting calculated. So as I mentioned, we are starting this completed contract. So I will go to estimates. So right now I don't have anything estimated there. And again, I can do it either one by one as an accountant. If I have a small number of projects that I'm working with, I could just go in and, on demand say, okay, right now I want to run my revenue estimation for January for this specific revenue estimate contract project. I could definitely do that, or I could decide that I want to run this as a periodic process for all of my revenue estimate projects. So that is just main menu item that I would run this process for all of them together. But we will do it right now one by one just to illustrate how it works. So I'm picking the estimate date, and that drop down that I had, if you can see, this is coming from my period codes that I have configured, and I'm using this revenue estimate project. And that is something that is coming from project cost and revenue profile associated. And so I am grabbing this, let's say, starting with the January. And if I want to make sure that I'm not skipping any of the periods in there, I can leave this toggle set to continuous. Right now, cost to complete methods, I can choose from multiple ones, and some of them are more often used, some of them are less often. So I will not going to cover all of these. I will talk just about a couple. So this total cost actual would allow me to go into the cost estimate. There is a cost estimate button that allows me to go in and pick which specific completed percentage I'm going to use for which line. If I'm going to use remaining budget, is really not much applicable in our scenario yet. I will talk a little bit later why. As previous estimate, if I would just want to set it exactly as a previous estimate if I had one before, but this is, I don't have any, so obviously that's not something that I would want to do. If I would want to make sure that this project is, I'm getting the signal from the my project manager that this project is closing out, everything is done, I can set cost to complete to 0, and that would kind of calculate the final total amounts for it in that period that I have selected. The one of the most often used ones is total forecast actuals. So then it's taking total estimates that you have recorded in your operational level, like running estimate that you would have for your expenses and your resource assignments, and would compare it to actual transactions that have been posted over the period. And would calculate that. And the, from cost template is the one that cost template that I've been showing just a couple of minutes ago, where we had ability to define for every single line what type of cost to complete method I would be using, and then it would just use from that specific line. So let's say I can select from the cost template. And as I mentioned, completion method can be either automatic, so it means I let system to calculate what that cost to complete would be. I can choose and say, I don't want that to be automatic, I want that to be manual, and I'm manually going to enter the number of the percent completion. That is something that I can absolutely do. And if I say for some of the lines it is automatic, for some of the lines it's manual, and I'm defining which lines are what in the cost template, then I could say from cost template, and then it would know for which lines what to apply and why I need manually enter percentage completion or why I would do automatic. So I will just do automatic for now. And for some of the methods, we will go to that in completed percentage. The forecast model would be something that would be applicable, but in this case, I will just switch this to total cost actual, and I will leave this empty. So I'm running this periodic process, and it's looking at the transactions, and based on those transactions, it's calculating what would be percentage completion of that project. And in this case, in my case, it calculated that my project is 25% complete, and it knows about my contract value that I had in my project contract line. Remember, there were $10,000 on that fixed price contract line. I have invoiced revenue that I posted. Again, I haven't shown you, as I mentioned, posting the invoice itself, but $2,000 have been invoiced, and it added it there. And it left accrued revenue as 0. And this is because this is a completed contract method, and we are going to accrue the revenue when we are finishing the project itself. And it also accumulated what is the total cost for this project is for this period. And as we talked, I can look actually at the cost estimate, and I look in more details. I can see that my expense cost, actual cost is $1,000. And that's what I have posted for this project already, if you remember the scenario. And my hours actual cost is $1,200, and I can review the same in quantity as well. So for expense, I have posted mileage. It was 100 miles, and this is something that shows up here as quantity. And for time, I have posted 10 hours, and we understand that accumulated there were 10 hours that have been posted for this project as well. So I can see both from the amount and cost perspective, and I can drill into those details. And we also do have tabs here that allows me, again, to review that estimate that was created, and see also some of the totals available out there, and from what it's applicable based on the method, and I can see the VIP. So in my example, that cost that I have posted would get into VIP, and I will post this estimate, and I can see the totals that it's 1,200 of those hours and $1,000 in expense, and the total VIP cost is 2,200. So, and my VIP invoiced on account is 2,000, and it understands that as well from the invoice posting that has happened. So it accumulates all of that information for that period. And then when I'm ready, I can go on and I can post this estimate. And what that posting is going to do, it's going to record this estimate to the ledger. And if I will look into my posted ledger transactions, I can see that I do have my cost of project, both for expense and for labor. I have it credited because I'm taking it out from the actual transactions that I have been recorded to the P&L at the time when I posted project operations integration journal. So it's indicating I don't want this to have it in P&L yet. Instead of that, I want to keep those transactions and my work in progress in my VIP, and I will keep them in there up until I'm completing this project. So that's exactly just taking out from my P&L and putting them into the VIP as a part of this estimate. So the same way as I have done January, I can quickly do February in my example, and I can again say this is total cost actual. So in February, what happened? There was no invoice that I have posted, but my total cost, there was another 10 hours that I have recorded. And I can again grab and I can post this as well, just to move on. And my percentage complete, as I spent 20 hours out of that 40 hours that I have estimated, it understands that it's probably 50% or so complete. And I will calculate the last one for March, and I will take again the same revenue recognition method and automatic. And well, in this case, as I know, as my project is ending in March, instead of taking that total cost actual, if I say I'm ready to close out on this project, I can say that set cost to complete already to 0, meaning that I have completed everything that I have planned already for this project. So I'm doing this. At this point of time, my percentage completed gets to 100%, and I have all the totals accumulated. So my contract value was $10,000, and I invoiced January 2,000 and March 8,000 for it. And I have accumulated total cost over the periods. So if I will just post this one, you will see that this ledger posting so far is nothing different than what I have used in my previous postings. So it's just taking again from cost of project and the VIP account. But as my percentage completion is already 100%, I can choose to close out this project revenue estimate financially, which we call elimination. So I can choose to go in and say, eliminate this project right now. And what it's going to do, it's going to create elimination record for me, which is essentially, if I look into the ledger, what it has done, it has taken all of the VIP cost that I have accumulated over those 3 periods, and I accumulated $1,000 of expense and $3,600 of labor. And if you have posted that from VIP account to actual cost account, so it means at the end of the March, when I say this project is complete, I'm recognizing all the cost of my project. And at the same time, it's taking my VIP invoiced on account from my VIP account again for my revenue and putting it to actual revenue account. And in this case, if end of March, I'm running my P&L, I'm able to see that looking at this specific project financially, I have $10,000 of revenue and $4,600 of cost across expense and labor. And this is going to be reflected in my financial P&L at this point of time. And again, if I would want to go on and let's say something has changed and I want to reverse this elimination and I could easily do that. So there is a reverse elimination button, and that would just reverse all the postings that I've done and would reopen this project. And I could unwind this and go backwards also with my estimates. I could reverse my revenue estimates that I have posted as well if I need to, recalculate and post the new ones. So this is something that is easily supported through a few clicks, and that would help you to redo it with a new method if you had a change of heart. Okay, so that would be for the completed contract method. So right now, let's go and just spend a little bit behind the time. I will spend just a minute talking about completed percentage method and how it is different, and we'll do at least one estimate for that. So I will grab, I think this one is where I had more interesting data here. So I already posted those this completed percentage method. So the process, the way how I've done it was following exactly the same pattern that I have just created. Estimate for one period, a second period, third period, and after on the last period, I said I have completed this contract as well, and I've done elimination. Postings, though, are different in percentage completed method, and you can see that each of the periods already have accrued revenue account because we are recognizing revenue not at the time when we completing the full contract, but at the time when we are completing based on a periodic basis based on the percentage completion that has got calculated here. So if I will look into the ledger impact, it is different. And in this case, I do have accrued revenue posting that gets posted, and on the and I get that accrued revenue obviously credited because revenues goes to credit. And on the debit side, it's taking the whatever I set up a project VIP sales value account in the ledger posting setup and takes it from that account. So this follows the same pattern through the periods here. And my cost that I have accumulated for that specific project, if you remember, because we set it up to post to P&L, was already in P&L, and we are leaving it in P&L because I'm recognizing both my cost and revenue in the same period for that portion of the project. And right now, in the end, what elimination does in that example, if you will look into the ledger again, it is taking then the uninvoiced VIP uninvoiced account amounts that have been accrued at the time when I've been posting project invoices, because I haven't been posting it to the to there, and it's closing it out against project VIP sales value account that, if you remember, was being debited in every single period when I was recognizing the revenue. So that would be a very, very brief overview how that percentage completion works. And just to remind, if for percentage completion, most of the people probably will want to use the forecasts and classic project management and accounting familiar, people will know that in classic PMA, we do have ability to define multiple forecast models and use those multiple forecast models for revenue recognition as well. In the integrated scenario world, what we support at this point, we do support the running estimate that you have setting up on your project. So if I will look into my project just again for a sec, and let me grab the same completed percentage as an example. So I have my project tasks that I have created when I planned out this project, and on the in my example, I have installation work that happens January, February, and March, and I posted those into those 5 days, and I have planned 5 days in total over those 3 periods, which is 40 hours, as I mentioned. So those 40 hours, as soon as I assign that task to a specific resource, it creates resource assignment record, which flows to financials as my hour forecasts. With the forecast model that I have set up in my project management and accounting parameters on the finance side. It always is going to use one single model. That's the single model that we support right now in the integrated scenario. If I, let's say, set it up to be 40 hours right now, I have run my revenue recognition for January, and let's say in February, that running estimate got adjusted by project manager and resource assignments got adjusted because situation has changed. My forecast is going to be updated on the financial side as well. And that updated forecast is going to be used for the next revenue estimate that I would be calculating and posting. And the same happens with expense estimates. Any expense estimate that I enter here, in my example, I had 200 hours that I initially, 200 miles that I initially estimated, this $2,000. That flows as well as expense forecast with that default forecast model to finance side, and is used for and can be used also for revenue estimation.